Hello and welcome. The team here at My Tax Accountant has put together something really important for you today. We're going to be talking about the UK's empty homes premium. Now, there are some major new rules coming that could have a huge, and I mean huge, impact on your finances if you're a property owner. So if you own a property that's empty right now, or you think it might be soon, you really need to stick around for the next few minutes. Okay, let's just jump straight in. Look at this number, £8,000. What if I told you that this could be your new annual council tax bill for just one single average-sized empty property? And no, that's not a typo. We're not talking about some giant mansion here. This is a very real possibility for a standard home under the new rules that are about to take effect. Yeah, it's a pretty shocking figure, isn't it? And it leads to a really critical question. Could this actually be your new reality? So that's what we're here to do today. We're going to help you understand exactly why this is happening, and even more importantly, what you can do to avoid this kind of massive financial shock. With these big changes just around the corner, being prepared is your absolute best defense. So here's how we're going to break it down for you, a clear path from the problem right through to the solution. First, we'll unpack that shocking bill so you know exactly where that number comes from. Then we'll dive into the details of the new rules. After that, and this part is crucial, we'll cover your legal rights and any exemptions you might be able to get. Then we'll move on to some smart, proactive strategies to protect your investment. And finally, we'll talk about why getting professional help is so important.
Okay, let's get into our first section, that shocking new bill. We're going to explore why a tax that probably isn't even on your radar right now, one you've likely never had to think about before, could very soon become one of your biggest and most painful annual expenses.
So, what on earth is this tax? Well, the Empty Homes Premium, or EHP for short, is basically an extra charge that councils can tack on top of your normal council tax bill. It's specifically aimed at properties that have been left empty, and that means both unoccupied and substantially unfurnished for more than a year. The idea behind it is actually pretty simple. The government wants to give owners a really strong financial push to get these empty properties back into use, whether that means selling them, renting them out, or moving in.
Okay, and this is the really crucial bit, the whole reason we're having this chat right now. The rules are changing, and they're changing in a big way. Starting from April 2025, the trigger for this premium gets a whole lot shorter, and the financial penalties get a whole lot steeper. This isn't some problem for the distant future. Honestly, the clock is ticking for property owners to get their plans in place before these changes land.
So, you're probably thinking, why are they cracking down so hard all of a sudden? Well, look at this number. In 2024, there are an estimated 278,450 long-term empty homes just in England. To give you some perspective, that's enough housing for the entire population of a city like Brenton. It's a massive number. And with the country in a housing crisis, the government sees these properties as a huge untapped resource. This policy is one of their main tools to try and fix that.
Right, so that's the why. It really sets the stage. Now let's move into Section 2 and break down the specifics of these 2025/26 changes. This is where we get into the nitty-gritty of what this is all actually going to mean for your bank account.
You know, this whole thing didn't just pop up overnight. It's really been a slow and steady tightening of the screws over the years. It kicked off back in 2013 with a pretty modest 50% premium, and that was only after a property had been empty for 2 whole years. Then, in 2018 and 2023, new laws came in that really strengthened the rules, ramping up the penalties and, critically, cutting that trigger period down to just 12 months. And now, these 2025 changes, well, they're the biggest and most costly step yet. All right, now this is where it gets really, really painful. Just look at how these costs skyrocket over time. From April 2025, if your property has been empty for just 1 to 5 years, you're looking at a 100% premium. That means your council tax bill instantly doubles. If it stays empty for 5 to 10 years, that premium shoots up to 200%, making your total bill triple the standard rate. And for any property empty for over 10 years, the premium is an eye-watering 300%, meaning you pay 4 times the normal council tax. Okay, let's make this real. Numbers on a chart are one thing, but let's see how this actually plays out. We'll take a super standard example, a property with a normal council tax bill of about £2,000 a year. Maybe it's a house you inherited or an investment you bought a while back that needs a bit of work. So after just one single year of that property sitting empty, boom, the bill jumps. that 100% premium kicks in and your new annual cost is £4,000. It's doubled, just like that. That's an extra $2,000 you've got to find, simply for letting the property sit vacant for 12 months. Now, stay with me here, because this is where it starts to get wild. If that same property is still empty after 5 years, maybe the renovations took way longer than you thought, or you just couldn't find a buyer, the premium leaps up to 200%. Your annual bill is now £6,000. We're already at triple the original cost, costing you £4,000 extra every single year. And this is exactly what the government wants. They want to make it financially painful to just sit on an empty property. After 10 years, you'll hit with that staggering figure we started with, £8,000 year after year. Over that decade, you would have paid a grand total of £60,000 in council tax on a property that's earned you absolutely nothing. It's literally turned a valuable asset into a massive financial drain. Okay, so the rules are tough, no doubt about it. But, and this is a big but, you're not powerless. And that brings us to a really important section, understanding your legal rights and the exemptions that are out there. This is all about how you can navigate the system, push back, and challenge a charge if you think it's unfair. So let's say you get that dreaded bill, and you're thinking, hang on, this isn't right. What do? Well, there's a clear 2-step process. First, don't just pay it. Start with an informal review. That means you contact your local council, explain your situation, and, this is the most important part, you give them your evidence. If that doesn't work and they still disagree, you have the right to take it further, to a formal appeal with the Valuation Tribunal for England, which is a totally independent body. Knowing your exemptions is absolutely key here, and these ones are mandatory. That means if you meet the criteria, the council has to give them to you. It covers things like properties owned by armed forces personnel or homes where probate was just granted. And, really important for a lot of owners, it can also include properties that are undergoing major structural work or are actively on the market for sale or rent. But just be careful, a lot of these have a strict 12-month time limit. And here's a pro tip for you, and honestly, this could save you a fortune. Document everything. I mean everything. Start a file. Keep every invoice from your builders. Take photos before and after repairs. Save copies of your right move listing. Keep emails with your estate agent. When it comes to an appeal, the person with the best evidence wins. It's not enough to just say it. You've got to have the paper trail to prove it. All right, so that's the defense, how to fight back if you get a bill. But now let's get on the offense. Section 4 is all about the smart, proactive things you can do to avoid this premium altogether and make sure your property stays a valuable investment, not a liability. Okay, this slide right here really just lays it all out in black and white. On the left, if you leave our example property empty for over 5 years, it's costing you £8,000 a year between that triple council tax and basic upkeep. You are $8,000 in the red. On the right, renting it out, even after you pay for maintenance and tax on the rent, could leave you with a net positive of over £7,000. That is a £15,000 difference every single year. It's a no-brainer, really. But look, a standard rental isn't your only play here. You've got options. You could use short-term lets to make sure the property is occupied often enough to break that continuous unoccupied status. You could look into a guardianship scheme, which we'll talk more about in a second. If the place is genuinely uninhabitable, getting started on those major renovations can get you that temporary exemption. And of course, you can always think about changing the property's use or just selling it, which is the one surefire way to get rid of these costs for good. Here's another brilliant tip, and it's one a lot of property owners just don't know about: property guardianship schemes. Basically, these companies place vetted people, often young professionals or key workers, into your empty property for a low rent. For you, as the owner, it's a total win-win. It keeps the building secure, stops squatters and vandals, and crucially, because the guardians are living there, the property is legally considered occupied, which means no empty homes premium is due. Phew, okay, we have covered a ton of ground, haven't we? From the size of the problem to the new rules, your rights, and some smart solutions. Which brings us to our final section, getting professional help. Let's talk about why trying to navigate all of this is probably not something you should do all on your own. Look, here's the bottom line. The financial stakes here are incredibly high. The rules are really complex, and they can even be slightly different from one council to the next. And that April 2025 deadline is coming up fast. Trying to guess your way through this, it's just not an option. To protect your investment and make the right call for your situation, you need a clear, professional strategy from an expert. So it all really comes down to this one simple but massive question you've got to ask yourself. When these new rules hit in April 2025, is your property going to be a valuable asset that's helping your financial future? Or is it suddenly going to become your biggest financial liability, just draining money from your bank account month after month?
So, if you want to make absolutely sure your property stays on the asset side of that question, please don't leave it to chance. For professional help in building a strategy for the empty homes premium that's perfect for you, get in touch with the experts at My Tax Accountant. You can reach them on WhatsApp or by phone at 07854 255 375, or you can drop them an email at info@mytaxaccountant.co.uk. And for more great updates like this one, make sure you subscribe to their YouTube channel. Thanks so much for joining us for this important discussion.